Guys, you are not going to believe it. Today, you know that your boy Rav loves his S&P 500 stocks, but I was talking to ChatGPT how we all do it nowadays, and guess what? I have found out that gold has actually outperformed the whole S&P 500 by over 70% in the last 20 years. Let me show you this chart, guys, and let me talk to you about why I will still only invest in the S&P 500. Hey guys, thank you again for tuning in. Please subscribe. It really helps your boy Rav out. But now listen, guys. So, just like how the intro was saying, I was just talking to ChatGPT because I was just curious to see how metals actually performed against the S&P 500. And again, this is just stuff that I do anytime I have any free time in the day. And I was looking, and obviously right now, the golds are doing fantastic because gold and silver are hedges against people's stress to the economy, such as like tariffs and stuff like that. So I took a look, and I was actually surprised to see for the last 20 years, gold has actually outperformed the S&P 500, which is crazy to me because I'm just, the only thing I've been doing is investing in the S&P 500. Now, I actually do have a lot of gold and silver, but very little amounts compared to my overall stock market, you could kind of say portfolio. So I took a look, and I took a look deeper to see actually why this happens. And it makes sense. The stuff like gold and rare metals, they're very popular. They're very popular in times of turmoil. So anytime where people are stressed, people don't know what's going to happen with the economy. They don't know if all the big stocks can still be performing as good as they do. So what do they look for? They look at something that's proven. Now, even gold has inflation that I don't think a lot of people realize it, because you still produce gold because we mine it, and it grows up roughly around 2% per year. So which is actually pretty solid. But that means that gold prices stay relatively stagnant and they will not go down. I was looking at another inflation report of just gold versus cash. And do you know 10 bricks of gold, if let's just say, for example, they were worth $500,000, all right? 10 bricks of gold 50 years ago would buy you a house. 10 bricks of gold today would probably buy you a house as well. So as you can see, it inflated very well. But is that a better investment than the S&P 500? Now, in the short term, the answer is actually yes. If the stock market is in a turmoil position where people don't know what's happening, there's war tensions, tariff tension, all of those type of stuff, the stock market does fall because the stock market is people's predictions on the short term. A lot of it's very short term emotional. Long term, it's very good. But for gold, a lot of people put their money into it because it's short term relief. I could kind of think of it like that. And if you take a look at the chart, just as I'm looking at it, when we were looking at 2008, and we see that gold had massively outpaced the S&P 500 and pretty much every single other inflation tool. Even silver has done fantastic during that time, but only for a certain amount of time before it fell back down. And just saying, it's been years, so it was outperforming the S&P for a good amount of years. Now I see two good things about that, because if you did have your money in gold, you were able to sell it and buy S&P very cheap. Or if you had no gold, I would probably not buy it. And so if you also look at the 2000, if you look at 2020 when COVID was striking, you can see gold prices had a huge jump as well. And then recently with tariff tensions, gold had another huge jump. So over 20 years, it looks like gold is actually destroying the stock market. However, if you look at a little bit longer, let's just say 30 years, you can start to see the difference. In 30 years, there's over 250% difference in gold and stocks. And the reason why I think this is again, people bet on the economy for the long term because economy is going to grow, and economy doesn't just need gold, right? It needs businesses to grow. Now, how would I use this as a strategy to make money? Because now obviously I'm rethinking, and this is what I love to do. The more I learn, the more I like to fine tune the details. So as I told you, I had gold before. I still have gold, sorry, and I still have silver, but not a bunch of it. What I'm going to start to do in my own portfolio is I'm going to start to buy gold and buy, so I don't expect it to have a huge drop, but I'm going to buy gold and silver when the economy is stable. This might be a year from now, this might be 2 years or 3 years, who knows how far it is, or it might be till the end of the presidency of Donald Trump. But when the stock market is going strong, I'm going to take some of those returns, some of those dividends, for example, and I'm going to buy gold with it. And I'll buy gold because when terminal events happen, so let's just say the next COVID happens, the next 2008 recession, the next 2000 dot bomb, whatever happens, because it's going to happen, it's just a matter of time. That's the moment that I'll sell my rare earth metals and use that money to just buy into the market. And I already do this practically with just cash savings, which I always recommend to everybody. You always have your opportunity fund, as I like to say it. So if you just have your opportunity fund and you do it, it's just another way, because your opportunity fund is still cash. So you could just make that all into gold, and you're hedging against inflation very well. And the only one downside is it's still very easy to transfer to gold, to cash to gold. Like it's not hard at all, but it's still another step you have to do versus just having cash. But from the returns, it looks well, because your cash is not going to appreciate during a recession. That's definitely not going to appreciate. But if your gold appreciates and your gold's way outperforming the stock market, you can take those gains and just buy the S&P with it. And then once it starts balancing out, you'll see those gains over the long term make a lot more money. And even if we look at 50 years, you can see that the difference is substantial, complete night and day between the stock market and gold. And even 80 years, which you don't even need to look that far behind, but it's definitely outpaced it. Now, even in markets such as these, you could still buy gold, but I don't recommend it just because the price is so high. Even the S&P 500, that price is so high. So maybe dollar cost averaging into gold may not be the worst idea. But for my portfolio, I think I've already laid down the downwork. Regardless if it's good or bad, I buy the stocks. And from gold, I'll just start to add that onto my portfolio little by little. And there are ETFs, I'll post some right here, that you can use to buy gold. But even ETFs for gold, I don't think is as good as buying the real thing. But it honestly wouldn't hurt. I think you'd probably be well off no matter what you did. So I might just decide to buy the ETF and then sell the ETF when recessionary times happen and the price goes crazy high. And then one more thing I want to relate to with this topic was, a lot of people only buy gold for jewelry and stuff like that, which again, I guess it appreciates a little bit, but actual bricks of gold is what's really going to appreciate, the pure stuff. And the pure stuff is silver too. So if you can't buy gold, buy silver. And silver, from looking at the charts too, has done fantastic as well. Like the chart I'm going to show you here, it's a chart that has the Dow Jones index, the S&P 500, and then it has silver and it had gold, and it has gold. You can see over 10 years that everything's kind of very similar. You can see gold and the S&P 500 are pretty much neck to neck, same with the Dow Jones and silver, which are a little lower. But if you look at 30 years, you can see the Dow Jones and S&P 500 are more closer to gold than they are silver. But if you look at 50 years, you can see night and day difference. Now, again, like I always want to recommend before I exit this video, don't just randomly buy gold because you heard me talk about it. Don't just buy gold because you're scared. And this is the most important thing. Don't sell your S&P 500 investment for gold. Look at the overturn for 30 years, okay? You would have never made as much money in gold as you would have in the stock market. So guys, stay invested, stay strong. And again, if you guys want to try this new strategy out with me, let's do it together. Have a great rest of your day, guys, and we'll see you next time.